Hello and welcome back to Instant Insights. At Global Data Strategic Intelligence, we track over 100 tech, industry, ESG, and macro themes impacting all major sectors. I'm Carolina Pinto, and today I'm joined by Justin Cox, Director of Global Production at Global Data's automotive team. Justin, how are you?
Fine, thank you.
Thank you so much for joining me today. Today, I brought you on the podcast to really talk about your upcoming webinar where you and your colleagues will be talking about the impact of the Trump tariffs and really any potential retaliatory tariffs on the auto sector. My first question is really what specific tariffs are impacting the auto industry and what are your initial thoughts on this impact?
Well, they are hugely significant. I mean, just looking at their scale, you've got a 25% tariff on vehicle imports, you've got a 25% on auto part imports, as well as sort of additional ancillary tariffs. Collectively, this has the potential to really hit the US vehicle market, and that's principally because the US market has been trading relatively openly for decades, and this has created a kind of supply chain structure which simply reflects those relative freedoms that the market's enjoyed. Consumers too, I mean, that they are familiar and used to the kind of breadth of market choice that this established supply chain has supported. Choice right through the segments from the entry level through to the sort of super premium. But perhaps most importantly for the Trump administration, this prevailing trade system that's been enjoyed has meant about half of the vehicles sold in the US last year were imports. And those that were actually built in the US, big chunks of their content quite often comes from overseas suppliers. So really, it's a kind of scale of these new sizable tariffs that are really set to have a big impact on the US market and indeed its current supply chain.
Well, you mentioned the scale, but there's been rumors, and as of today, when we're recording, Monday, the 12th of May, we have heard that China and the US have come into an agreement to water down the tariffs, reduce them by 125%, so that imports into the US would have 30% tariff, and then imports into China, 10% tariff. What does this tell us about the impact? Will it soften the impact, or what does it mean?
Yeah, I mean, China's a little bit of a red herring because it exports such few vehicles directly into the US. But obviously, components are important for China to export into the US. So those things will be welcome. And yep, you're right. There have been some watering down on tariffs, and particularly, probably more importantly, for Canada and Mexico. I
Mm-hmm.
mean, their auto sectors are historically entwined with the US, but as I say, of course, any relief is welcome, but those remaining tariffs are still pretty big and certainly cumbersome to manage. So the impact of costs and pricing are still expected to be pretty huge for the industry.
And in your view, what are the auto manufacturers going to do about these tariffs?
Well, each automaker will have its own individual, unique exposure to the US market, whether that's in their particular manufacturing footprint, but also an automaker will be considering where their brands are positioned in the market. How sensitive those particular brands or models will be to any price change. Naturally, any automaker now selling vehicles into the US auto market will be considering activities to help soften the impact from the new tariff structure. And these plans may include an increase in the localization of vehicle production or indeed, part sourcing in the US, as well as looking at adopting particular market tactics which might help help that sort of pass through of tariff costs through to consumers. and this exercise, is clearly challenging for auto industry, and there is still much uncertainty surrounding that final endpoint of current US tariff policy. And uncertainty, it's never good for planning. It's never good for investment, and certainly not for the wider economy, which, in itself will create a drag to auto markets and production really elsewhere in the world. So really, we're expecting still tough times.
Thank you, Justin, for those insights. Thank you for joining me today.
Thank you, Carolina.
And for our audience, if you want to get any more insights on the impact of the tariffs on the auto industry, please sign up to the webinar. The link is in the description below. Thanks for listening from us at Strategic Intelligence. See you next time.